Get ready for a storm in the economic waters as Shark Tank luminary Kevin O'Leary sounds the alarm on impending chaos in the U.S. economy. With emotions running high, O'Leary raises an urgent red flag. He's convinced that surging interest rates, a byproduct of the Federal Reserve's battle against inflation, are on the cusp of unleashing fresh turmoil. The battle to subdue inflation has driven the Fed fund rates to a towering 5.25%, 5.50%, the loftiest they've been since 2001. This meteoric rise has sent shivers down the spines of market watchers who fear it might over-tighten financial strings, possibly plunging the economy into a dreaded recession. The question now resonates deeply. Are we on the brink of another economic tempest? And can the storm be weathered? Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button. Leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. In the ever-churning seas of the U.S. economy, a formidable figure, Shark Tank star Kevin O'Leary, stands as an emphatic voice of caution. As the Federal Reserve wages a fierce war against inflation, the battlefield is the interest rates, and they're soaring to new heights, creating a battleground of financial uncertainty. O'Leary's pointed finger has landed on these soaring rates, drawing attention to the fact that they could be the catalyst for a fresh wave of economic turbulence. These interest rates have scaled a peak not witnessed in over 2 decades, with the Fed fund rates now oscillating within the 5.25%, 5.50% range, a level last seen in the early 2000s. Yet, this isn't just another statistic. It's a siren's call of concern. The worry is that this steep ascent might lead to an over-tightening of the economic reins, potentially thrusting the nation into the heart of a recession. Economists are painting a picture of caution that's mirrored in O'Leary's voice, an urgency that's etched in his words. But this isn't just about numbers on paper. This is about the domino effect that these towering interest rates could trigger. The landscape of commercial real estate, a realm built on borrowed capital, is particularly vulnerable. A staggering $1.50 trillion in debt is set to mature within the next few years. And this impending deadline isn't just a mark on a calendar. It's a specter of change. Loans that were once secured at a relatively moderate 5%, 6% interest rate are now staring at a much steeper 9%, 11% cost of borrowing, a cost that threatens to buckle property firms under its weight. The cracks have already begun to form. Bloomberg's analysis reveals that troubled property assets are piling up, with the tally now soaring to $64 billion. Commercial mortgage delinquencies, the early indicators of financial stress, have ascended to 3% in the first quarter of 2023, painting a picture of distress that's impossible to ignore. The impact isn't just confined within the walls of financial institutions, it's a tide that sweeps across sectors. The looming shadows are cast not just over buildings, but over the very institutions that enable the financial dance. Banks are now caught in a vice grip of pressure, contending with the necessity of bolstering their capital. OLearys Insight shines light on their plight as higher capital requirements beckon. These institutions are having to tighten their lending belts. It's a pullback that's registering as a historical tremor, as lending conditions contract with an intensity unparalleled in recent memory. The fallout from this isn't just within the walls of financial establishments. It's impacting the pulse of small businesses, the very lifeblood of the economy. O'Leary's words resonate with an air of concern as he highlights a grim reality. Businesses with under $500 million in sales are receiving a cold shoulder from lenders. The result is a ripple effect that nudges companies towards the shadowy realm of the shadow banking market, a realm that exists just beyond the borders of traditional finance. The narrative that's emerging is one of impending chaos, one that's rooted in the short term but carries echoes for the long term. O'Leary's words aren't just those of a market pundit. They're an alarm, a stark reminder that the stakes are higher than they've been in a while. The crossroads are looming, and the pressure is building. OLearys foresight places this critical juncture somewhere between September and November of this very year. The picture he paints is clear. The echoes of this storm will reverberate through the corridors of the economy, through the veins of small businesses, through the daily lives of countless individuals. As the financial tides surge and uncertainty looms, where do you stand in this economic tempest? What measures can a nation take to steer its course amidst the waves of change? And what role do you envision for the individual in weathering this storm? Share your thoughts in the comments section below. And remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.